Hi, this is Adam Hewison. I'm coming to you from the digital studios of INO.com, and welcome to Traders Whiteboard. It's good to see you. Thanks for stopping by. I want to show you two of my favorite lessons that I think you'll enjoy, and I think you'll profit by these lessons. These are chart formations that have been going on for a long time. I've been using them for over 30 years, and they consistently work. So let's say the market is headed up, and we've got a nice bull market going, and I'm going to draw that for you right now. And let's say we hit a top, we see a pullback, some profit taking, and the market goes back up again to try to make a new high. It fails, and it breaks down, and we start a downward cycle in the market. So there we have the double top. We call that a double top. Some people call this an M top, but we're going to call it a double top. And then we have what's an all-important pivot point. Now, a pivot point is something you should remember and something you should look for in the marketplace. It's very powerful, and it gives you an opportunity to measure exactly where and how far the market should go. So let's just, this is almost like what I consider almost a perfect V. So here we have the double top again. Then we have the pivot point. We just project that over to the right. And then we just can measure from the top of the double top to the pivot point, and let's say for example it's 10. It could be 20, it could be whatever the measurement is. Once you break below the pivot point, you can measure the equal distance to the downside, and this gives you a chance to really do a short-term trade which could last for weeks or days, but it's a very strong indicator. This has a success ratio of about 90%. So you'd sell what I'm showing you, and you cover right there and make about 10 points in this particular example. Very powerful, very easy to use, and something that's been repeating itself forever. And the reason it repeats itself, it's just human nature. It just reflects traders' emotions, which haven't changed in thousands of years. So that's our double top pivot point example of how you can make money with this particular formation. This formation is in stocks, futures, mutual funds, precious metals, and it shows up all the time. Now, the example I'm going to give you now is just the opposite. Let's say the market's coming down, and here it is trending lower. You see a little bit of pop, some short covering. The market comes down to push down, make new lows, fails, and starts to move up. So here you have what is a classic double bottom. This is sometimes called a W bottom. And then you have your pivot point. Remember the pivot point, very important. Project it to the right again. And then you have a situation where you measure from the top of the pivot point to the two lows on the double bottom. And that's your measurement. Then you project that same measurement to the upside. And that is where you should be taking your profits. So it's very consistent, high degree of reliability, about 90% as I said, and I think this is something you should definitely look for in your trading. So again, you would basically buy on the move over the pivot point, and you would take profits right here. Very consistent. Two of my favorite formations. They're used very heavily by professional traders. Put this in your own trading, and you will be successful trading the markets. Hey, this is Adam Hewison. Thanks for watching. And be sure to visit Traders blog. Thanks for watching Traders Whiteboard. Be sure to visit Traders blog. A lot of great videos, trading tips, all available to you for free.